Welcome everyone this afternoon to our digital banking clinic. My name is Julita Lange. I'm a sales director at Ezbob, and it is my pleasure to share with you today a few tips on how to improve digital lending and digital process overall. Before I start the presentation, I just want to start by announcing a few housekeeping items. Please note that all participants are muted at the moment. Towards the end of the session, we'll enable participants to speak and join. Unfortunately, we will not be able to use the chat functionality due to the meeting settings, but we will allow for some additional questions towards the end of the session if we have time left. And also, please note kindly that the session is a recorded session for our own marketing purposes. So today's purpose of the session is to share a few tips and tricks on how to improve your digital lending. As a salesperson, I spent more than 15 years of my career talking to large and small financial institutions around implementation of enterprise risk and credit origination systems. And in preparation for today's session, I actually took a bit of a reflection on what are the pitfalls, what are the learnings about what prevented certain institutions from succeeding in their digital transformations. I think from talking to hundreds and hundreds of financial institutions, both prospects and also clients, I think there are some common traits, some best practices that we have found out will determine the success of a digital transformation. So what should be the considerations that you should take into account? Technology is definitely one of them. The technology here is the enabler to deliver the digital transformation. But technology alone is not going to make you digital. So hopefully today you will take away a few other aspects about how to prepare yourself for a successful digital transformation. But before I start talking about details, I want to spend just a couple of minutes introducing us as an organization. I want to tell you a little bit about Ezbob. Ezbob actually has been a pioneer in the UK market when it comes to digital lending. We started our existence over a decade ago as an SME lender focused on a quick digital process, allowing small and medium enterprises to have access to working capital the same day. And when we used to being a lender, our marketing slogan, our marketing motto was come to us, apply fully digitally, apply within minutes, and get an instant decision and money the same day. What happened a couple of years ago is that as an organization, we've done a pivot and we transitioned from being an active lender using our own balance sheet to become a fintech technology company. Today, we focus only on our end-to-end lending as a service platform. And what's important to note is that we have a lot of experience with very large organizations assisting them in digital transformation of their lending processes. One point to note is that because of our background as an ex-lender, we share various tips and best practices when it comes to revisiting of the lending process during the implementation of our platform. The platform there is really to facilitate your objectives and your ideas for digital transformation, and we can shape and help you understand what needs to be put in place in order to make that transition successful. One last point to note, whilst we are not going to be going through a demo of the platform today, and it is an end-to-end platform encompassing a digital user interface, data connectivity, decision orchestration, activation, and loan management and servicing, I'll be very happy to deliver that demo to any interested participants following the session today. Before we start talking about the 5 tips, I just wanted to spend a couple of minutes talking about why digital transformation is important. Why should financial institutions even think about a digital transformation? There's a couple of reasons for that. There's, of course, a lot of pressure from a competitive perspective. We have an emergence of challenger banks and alternative lenders that simply simply overflowed the market with digital capabilities. But also, if you execute a digital channel right, it can be a source of your own competitive advantage. This can be a source of new marketing buzz, of a new campaign to say, hi, my dear clients, you can actually now access us using our digital capabilities. And what happened over the last 12 months with the COVID situation certainly accelerated, especially large institutions' way and drive towards digital transformation, because simply you couldn't send your clients to the branch or to a physical face-to-face meeting with your relationship manager. You had to open your digital channels in order to facilitate contacts with your clients. And contacts with clients is really the key around digital transformation, because as the study conducted by BCG shows, 3/4 of financial institutions that are undergoing digital transformation really do that in order to improve their customer access and servicing capabilities. Another study recently published by Deloitte illustrates that 62% of all UK bank account holders use online banking at least twice a month. This becomes now the channel that people interact with when they think about banking services, rather than what used to be perceived as just a branch activity, an activity that had to be conducted face-to-face and on a piece of paper. Just concluding on the study here from BCG, one of the important points to note is that if the digital transformation is executed right, it brings a significant reduction of costs. In our own implementations and as Ezbob, we are able to demonstrate that we are able to deliver reductions of cost of almost 60% versus the previous paper and manual-based digital lending process. So if we talk about the digital transformation, I think there is a very common sense type of approach from financial institutions that know that they have to go through it. But the question is how? So there was another study very interestingly published by Forrester recently that talks about the current status of digital transformation. And if we look at the results of that study, about 40% of financial institutions today in the UK are already somewhat along that journey of digital transformation. And 19% of the interviewed institutions are still thinking about how to execute. They're still doing the research on the market as to what are the ways to conduct a digital transformation. But I'd like to point out that the middle result, the 26% of the institutions that say we're always in a state of digital transformation. Recently, we have conducted a session during the FTT Lending 3.0 event, and the title of the session was 50 Shades of Digital Transformation. Because one point that needs to be highlighted is the fact that digital transformation, sometimes it's a fluid state, because the goalpost of what needs to be achieved constantly moves away. You may end up in various shades of that digital transformation being conducted all the time. And this may be a state to stay with us for a long time. I hope that throughout the next couple of slides, I will be able to illustrate how a technology can facilitate the digital transformation, and also how partnership with a fintech company that offers a digital lending platform off the shelf can accelerate your plans towards a digital state. So let me now switch to the topic of our meeting today, so the key 5 tips. When thinking about the key 5 best practices, the 5 tips that I would like to share, obviously there were hundreds of them. I wanted to take a very holistic view. So what we are going to talk about today is not strictly only related to technology, but to the overall process of digital transformation. What makes the digital transformation successful? And I think we can put it in a very simple, almost circle, that starts with defining the objectives of that digital transformation. And those objectives may be changing on a year-to-year basis. And once you have those objectives, we should focus on what's the process that will underpin the delivery of those objectives. Well, we all quite often use the quote in discussions with our prospects: don't make the paper go faster, because if you bring a digital platform and if you invest in a digital transformation, you also have to consider processes behind the scenes that need to undergo a transformation as well. The third point to highlight would be people. Technology is fantastic, but it's only through the use of that technology by your teams that you as a banking institution or a financial institution will succeed. And two other points to highlight, as we noted, one of the key reasons why financial institutions undergo a digital transformation is through user experience. So hopefully in this area, I will share with you a few practical tips on how to very optimally set up the flow of your application process, and what are the clever things that can be implemented through the digital user interface in order to improve your conversions. Last but not least, data science is the key. Quite often these days we talk about embedded finance, on-the-spot POS finance, and data will really transform what digital means in the future for lending. It will be more data-driven, it will be more data underpinned. We'll talk about that later on. So let's start with the first point. Let's define what digital means. What are the objectives that you want to achieve? Quite commonly at this stage, when we interact with prospects or with new clients, the most typical objective will be, well, I simply want to open a digital channel. I may be a banking institution that has been existing for many years, and I may have my online banking, but within that online banking, all what you can do is just to see your balance, maybe do some simple payments. How do I enable a lending capability? How do I allow my clients to apply for a loan within that open banking or within that mobile app channel? So opening of that new channel is probably one of the key reasons why banking institutions turn to Ezbob. But also a second point will be, I may have already a digital channel, but actually I don't seem to be attracting new clients. I want to attract more clients. I want to attract maybe more penetration within my existing clients. And it's very interesting because quite often banking institutions try to come up and build an onboarding and application lending journey themselves. But if they don't apply the best practices and knowledge and expertise that is out there, sometimes having that digital channel on its own is not going to help you. Through some of the studies and some of the implementation studies Ezbob has done, we can demonstrate how buying a platform such as Ezbob can improve your conversion rates and bring you more clients quite significantly. For some of our current clients, we were able to deliver an increase in conversion rates of up to 400%. Quite often, what happens is that the user experience, whilst it's important, is actually not the key objective. We do talk to institutions that say, well, I have my channel, I have my application process figured out. I think clients are very happy. They say it's easy to navigate, but actually what happens behind the scene is the biggest pain point. So quite often from prospects that we talk to, we understand that getting to the decision and making that decision instant is actually the key objective. With a solution such as Ezbob, you can conduct an application process within the space of minutes, and that quick application may result in an instant decision. Whether it's yes, no, or maybe, that's another matter, but we can facilitate a very, very quick decisioning if that's what you desire. It's important to say that there is a misconception sometimes that banking institutions are afraid of quicker decisioning and automation because they are afraid of being perceived as an institution that delivers just a computerized decision, that computer says no, and we're very rigid and we are not flexible. That's not the case. Quicker decisioning may just simply mean that we reduce manual processing behind the scenes so that your underwriters and your credit officers can still make a manual decision if they want. They can still be very flexible in their credit origination framework, but at least we reduce the workload in, for example, getting to the data sources and gathering the information about clients. From our own world with clients that leverage Ezbob's platform, they're able to reduce the manual processing time of a single application by up to 30 times. As our studies show, for a relatively large size SME to make a loan and then to be reviewed by a credit officer in the application process, it may even take up to 30 hours to gather all the relevant data from relevant sources. By the sheer fact that a platform, a technology like Ezbob can collate data from over 40 different data sources and data partners within minutes, you save a lot of manual work, a lot of manual effort for a relationship manager or credit officer. It's also important to note that a platform like Ezbob can also process the data and produce outcomes, produce alerts, produce triggers, so that those can be visually presented to the credit officer to make the decision again quicker. And when we talk about data, another type of objective that we typically encounter in our discussions with prospects is around automation. Platforms such as Ezbob can bring more than 3,500 data points automatically within seconds after the application is completed. But automation is not the goal on its own. I wouldn't recommend automation for the automation's sake. It has to reflect your own risk appetite. It has to reflect your own organization setup. For some of our clients, we were able to achieve automation levels of 60 or even 90% given a specific type of lending. But this may not be good for anyone. It really has to reflect your own risk appetite, your own strategy in the market. One point to note is that quite often the way the automation can be set up is to automatically perhaps reject and reduce the pressure on your funnel and the number of applications by setting up upfront a few questions that can simply eliminate applications that are of no good quality. So what are your objectives? There can be many, many more, especially for if you're dealing with new to bank or new to you clients, that automated rejections can really reduce the strain on your resources and therefore also reduce the cost. You have to have at least one or two of those objectives in mind before you start exploring technology. Technology is one thing. Technology is a derivative of that objective. And also, as we talked, applying and investing in a technology alone is not going to get you into a digital transformation state. It's important to also see and revise the process behind the scenes. Quite often, it's a forgotten part of digital transformation. Financial institutions are very keen on leveraging the latest fintech's development, but tend to forget that this has impact on the wider holistic picture of what's happening behind the scenes. So one perhaps a common pitfall or observation that we have from some of our prospects and clients is that it's not enough to buy a platform and open up, so to speak, the digital channel. You have to think about it holistically from a marketing perspective, from communication perspective. For example, if you do allow your clients to apply digitally for a loan, how will they know that you have a digital channel if you didn't have it before? Are you planning on organizing a marketing campaign to promote that to your existing clients? Is there going to be an outreach to maybe some new clients? Are you planning on maybe working with brokers in order to raise awareness of the fact that now you have a digital journey and digital application process? It's also, I guess, a very important point to say that you have to think about a process not only for the happy paths. So once your clients do find you and do go through the online application process, you have to think about what happens if they don't succeed. What if their browser suddenly shuts down? What if some of the uploaded documents don't upload correctly? you have to make sure that organization as a whole is aware of the digital transformation, the process behind, for example, is let known to your customer services team so that they know how to deal with sort of everyday occurrences that may happen during interactions with technology. And we talked a little bit about the credit officers and underwriters. How will your underwriting process change? So if you do buy a technology that allows you to digitally conduct an application process, what does it mean for a credit officer? Will they be trained and made aware of the fact that today they may be requesting a face-to-face meeting, whilst in the digital path, that may not be possible. Maybe that's handled through emails. So a lot of the process re-engineering is also related to giving comfort to the users of technology, giving them enough training and understanding on what will be presented to them and what are the data on basis of which they will make the decision. And when talking about the holistic process, I don't want to forget about one other point to note around the yes, the so-called yes. Quite often when we talk to prospects, they come to us and say, we want to achieve a certain time to yes, we want to have a 7-minute turnaround, a 10-minute turnaround to get to yes. But think about it again holistically. Think about what is your time to money rather than time to yes. It's no good to set up a digital channel that will allow you to get to yes in 5 minutes if your clients will have to wait then 2 days to get the money at the end of the process. So it is really a point around rethinking, redesigning the operational process, making sure that all the elements of this process will be going smoothly. And remember that you will be only as fast as the slowest moving part of that holistic end-to-end lending process. And one other point that already came across in this slide is people behind the scenes. We talked a little bit about credit officers, but I don't want to limit the discussion around lending digitalization just to relationship managers and credit officers. I think the power and the success of the process really comes from involving all the relevant stakeholders that should be aware of the process. And it is truth that it's a change. So not everyone likes the change. You have to invest a little bit of time and make sure that your internal stakeholders will be aware of the changes. Quite often what happens is that because the introduction of a digital lending capability, digital lending process is touching the end clients, there is a lot of sensitivity and uneasiness and what will happen then, what will happen that. It's really essential to get everyone on board and make sure that they're comfortable. And we talked a little bit about, for example, organizing marketing campaign for promoting your digital channel. So I shouldn't, I really encourage you to not undermine an importance on any single team involved and that can be impacted by the introduction of a digital application process. Quite often, the processes that we observe, or one of the reasons why we struggle in implementations, is that we discover a part of the team or certain stakeholders that have not been involved from the very beginning and therefore don't feel comfortable. They may like the technology, but they just simply don't know it. They will refer to technology as, oh, what is this black box and what are the rules inside? We don't know. So, for example, for teams such as financial crime or KYC or compliance teams, it's very important for them to be involved from the very beginning and also to be very transparent. A technology such as Ezbob may contain thousands and thousands of rules that will be automatically executed. And it's important that we so-called open up that black box and we actually reveal line by line what's happening, what are the outcomes, what are the expected results of that technology to make sure that they understand that. So it takes time. I think my one word of warning is that quite often in our discussions with prospects, the key question that we receive is, oh, okay, fantastic. So Ezbob has this amazing technology. It's available off the shelf, and how quickly can you implement? Oh, wow, it's in a matter of weeks. But hold on, are you ready as an organization to actually start implementing? And so whilst the technology that, for example, Ezbob provides can be literally deployed within the space of weeks, the overall process of digital transformation of lending can take a little while. And as a last point, I want to emphasize the fact that there is sometimes a little bit of resistance, a little bit of hesitation around applying application of technology for lending purposes. As, for example, teams such as financial crime or compliance may say, well, I don't like this technology because it compromises on my rules. I will have to change my policies. I will have to change my procedures. And yes, part of it is change of the process behind the scenes. But the idea here is not to compromise on the rules of your credit policies or your risk policies. The idea is just to straight through process those rules and make sure that actually your resources spend more time on value add tasks rather than doing a very manual research and data login to verify the authentication of a given applicant. So people are absolutely essential. Whilst technology is definitely a derivative of your objectives and of your process, we should not forget about all the stakeholders. And one last point to note is that the most successful implementations that we've seen are actually sponsored by very, very senior management. Typically even C-level representation of the bank or financial institution can get involved, and that helps to align all stakeholders that need to be brought to the table and need to be brought to the alignment for the digital transformation. So let's talk about technology. We talked a lot about the peripheral aspects of digital transformation. So let's get down to the heart of what digital transformation means and the user experience and technology that underpins it. I call this section a carrot because it's sometimes quite often referred to as, how can we set up the user experience in the most intelligent way, in the most engaging way, so that your applicants, your clients can follow through that process, be happy with it, complete it very quickly, and get a very clear outcome of the journey. A carrot is actually the first tip that I wanted to share with the audience today. Quite often, what happens in our implementations and as a best practice, what we recommend is offering that carrot. So that means that your user interface can be structured into almost two sections so that the application process can be conducted first as an eligibility check, as a way of getting some really, really basic information about the applicant, about their business, and about what they want. We can literally conduct it within the space of 6 to 7 to 8 questions, after which they may get an indicative offer, so the so-called carrot. And how quickly you can get through that eligibility check sometimes determines a huge success for both a customer from their experience as well as for you as a financial institution. What we found out in our own experience as a lender is that the quicker you can propose even an indicative offer with some indicative pricing, the more likely your applicants will be to continue through the rest of the application process and answer some more intrusive, some more complicated questions. And here, if I was to share a tip specifically, for example, related to unsecured lending, we would structure the digital journey, the digital user interface in such a way that at the front, we'll ask a few personal details, a few details to identify, for example, the company of the applicant. We'll present the indicative offer, including pricing, to really entice the applicant to continue, or actually at this stage will reject you. So this comes back to the earlier point where the automation comes through. And one way of reducing strain on your underwriting resources is very quickly on reject, remove from the funnel so-called noise, the applications that don't meet your eligibility criteria, maybe that carry bad credit history, or maybe that simply don't fall within your own credit policies. And then what happens is that after that indicative offer, we'll focus on some of the more challenging questions. For example, questions around beneficial owners, directors, and shareholders sometimes drive quite a high level of drop-off ratio, as you may not have all the details about all the directors available to you all the time. Quite often after the indicative offer, we will start talking questions around financials. It can be done either through a questionnaire or through a connectivity to open banking. And similarly here, what we found out is that if you do have that offer already presented to the applicants, they will be more likely, more willing to go through those more intrusive, more demanding questions to pass the full application process. So if we structure the onboarding journey in this two-phased type of approach, that gives this illusion almost of an instant gratification, because whilst the indicative offer may not be the final offer, it gives you something to keep on going. And in the world of digital instant gratification that we are used to through using services such as Amazon or Netflix, it's incredibly important to almost translate that experience also into banking experience. So when talking about the likes of Amazon and Netflix, they are absolute gurus out there in terms of getting you to stick to your selection and buy something or choose a movie within as few clicks and as few touches as possible. And that actually translates very slowly into our lending experience as well. Quite often, we will talk to prospects that say to us, well, we want to design a digital application process that allows me to conduct a full application, for example, for an unsecured loan, a working capital loan, within a space of 20 clicks. It's entirely possible. Actually, some of our off-the-shelf journeys at Ezbob can be completed within the space of as few as 15 clicks in order to gather the minimum of data and actually turn, at the end of the application process, turn back to you with a decision. That is possible because of the power of data sources and data partners that are linked behind the scenes to the platform, integrated with the feed of data that allows us to ask fewer questions directly to the applicants and still get the same amount of information behind the scenes. So rather than really asking endless questions, 40, 50 ones, we can reduce the application form to absolute bare minimum, but still get the same amount of information behind the scenes. There's recently been a study published by a company called Built for Mars that indicated how many clicks it takes to open a bank account. And I believe for some of the worst banks out there, it took even 99 clicks. And it's, I think, less about the actual number, whether it's 50 clicks, 25 clicks, but it is about the mindset of being aware of the fact that your customers, especially the younger part of your target audience, will be thinking about their own experience in terms of clicks. And when we talk about the younger and more demanding part of the target audience, we should also talk about the fact that they are demanding in terms of the personalized experience. Again, bringing the examples of Netflix and Amazon, they continuously suggest what should be the products, what should be the movies that you should be looking at. That experience very slowly translates into banking space. And quite interestingly, within Ezbob's capabilities, quite often what we recommend to be implemented in the digital onboarding process is a step to personally, to provide a personal offer, or to personalize the product recommendation on the basis of the information that we have about clients. And very interestingly, the point here around personalization is to differentiate between a journey and application process for an existing client and a new client. If I bank with you already, and the bank should know things about me, don't ask me that same question again. Quite often with application processes, it seems like you are being asked things that a banking institution should know about me because I banked with them for 10 years. So thanks to a technology such as Ezbob, we can integrate to your own internal systems and actually present the known data about customers, so that effectively the lending application process becomes a click and confirm type of journey, rather than an endless process where you have to manually type in the information that should be known. And We talked a little bit about the younger audience. So one interesting customer experience that is quite frequently now asked of technologies such as Ezbob is to really digitalize the process, not only for the loan decision and the application, but also for the onboarding component. So let's assume that this is a new to bank client. We know nothing about this business or this customer, and we have to really verify how genuine that applicant is from a KYC perspective. So I call this last bubble actually a selfie anyone. One of the very interesting additional steps in the journeys that we provide is actually to go through a digital ID verification process. We can incorporate steps, for example, for a mobile style application journey, where you will be taking a selfie as part of the application process, and you can compare that selfie, for example, to a photo taken of your passport or of your driving license. And on that basis, not only we're able to verify that you're you, but also that this is a genuine person, and provide a capability of KYC that previously would have to be conducted in a face-to-face environment. I guess the underpinning component of customer experience and the journeys and how to optimally align the sets of questions and the flow of the questions is, don't give your customers an excuse to drop off. And one other aspect of where a platform such as Ezbob can come in handy is the visibility of the funnel and the visibility of data that is being produced. Thanks to platforms such as Ezbob, at any given moment in time, you can see how many of my applicants are at question number 2, how many have passed, for example, through the selfie stage, what sort of quality of photos they've submitted, how many clients have, for example, selected the connectivity to open banking versus going through the financial questionnaire manually. And this wealth of data, funnel analysis data being gathered behind the scenes, actually gives you an additional marketing input. So that, for example, if you have clients that dropped off at a certain point, you can easily pick up a phone and say, well, hi, John, what happened? We've seen that you've passed all the way until 10th or 12th question, and actually you decided to drop off. Is there anything we can do? So going back to my original point number 1 around the objectives, if your objective is to gain more clients and have higher levels of conversion in your digital channel, then definitely the underpinning data behind the scenes are a way to do this. When talking about data, so these are analytical data that we can produce just simply on the basis of applicants interacting with the platform. I want to now go to the last point of what I believe strongly allows us to digitalize the lending process today, the data science. I think one of the very core elements to digitalization and to a facilitation to the automation of the process is connectivity to various data sources and data partners. Platforms such as Ezbob can connect to more than 40 different data sources and data partners, and that fact allows you to conduct the application process within minutes and gather thousands and thousands of data points almost instantaneously, and not only gather the data in a static way, but also to verify and validate the data as and when needed. So for example, quite often you will come across lenders today that require connectivity to open banking or to accounting data or to tax data. The idea here is that we see the future of financing and lending, especially in the SME context, as a future that almost goes away from reliance on purely credit bureau data and to going to leverage transactional and behavioral data. Access to open banking is definitely a source of information about all your transactions, but also behavioral data, such as if we analyze line by line your raw transactions conducted over the last 12 months, we are able to see, for example, if you trade with sanctioned countries or whether there is any unusual behavior there that may be an indication for anti-money laundering. So open banking is not only a source of affordability and financial statement data, but also a source of verification let's say, smart KYC and verification of whether we want to work with this applicant at all. One other point to add is that in the post-COVID times, access to the latest financial statements, into the latest financial information about whether the company or a consumer is incredibly important. For many of the companies impacted by COVID, their financials are not going to truly reflect their capabilities, and the financial accounts that they may have filed with Companies House or that can be available through the credit bureau may be outdated, and they may not reflect the reality. So access to open banking can definitely overcome that part. One other important aspect, flavor to add to the power of data is accessibility to a point of sales or e-commerce data. Platforms such as Ezbob can provide you with automated access to, for example, data processed by PayPal or eBay or Amazon. And that can be an additional angle to be added into your credits review, credit underwriting process. And with the additional sets of data partners, such as partners that are able to verify the location of the device from which the application is being conducted, or for example, the authenticity of the mobile number being used, or the authenticity of the email address being used by the applicant, especially in the context of new to bank clients, that aspect of power of data for smart KYC, KYB, the analysis of fraud, anti-money laundering, and also screening against any of the watch list data that can be done instantaneously rather than through logging into different portals and different data sources. This is where the biggest efficiency of the digitalization of lending process can come through. One other point to add is that quite often when we talk with prospects, banking institutions, they will say, well, thank you, Ezbob, for suggesting all those amazing data sources. We connect to all of them today. So, what is the additional value? Well, the additional value is that with a platform such as Ezbob, we actually integrate all those data sources in one place, and we can present the results of these searches and data sources in one so-called golden file. Because it's great that you may have access, for example, to Experian and Equifax and some other sources, but if you can't compile all the data in one single view, it actually gets you only there halfway. So it's important that you will have one consolidated interface that allows your credit officers, your underwriters, your relationship managers at a glance to see all the data holistically, and then compare and contrast, see any discrepancies very quickly. It's even better if within that golden file, you can see the results of all the rules that are being executed automatically behind the scenes. And rather than going through every single data point, perhaps the system can suggest to you that, look at this area, look at that area, because this is where we've identified certain issues that may require a manual overview, a manual intervention. A power of a tool such as Ezbob is that we are able to process thousands of data, analyze them, do almost check marks when check marks are needed, but flag when things are not consistent or where there are issues. And on the flip side, I think what we see is that the more data sources you're using, the more accessible your financing is going to be. If you gather information from multiple data sources and you are able to build that 360-degree view of your applicant and their business, the more willing you may be to give a loan, because you will have a better understanding of that applicant than if you just relied on a single data point, on a single data source. So the data science combined with user experience, combined with power of people and process and objectives, those were the 5 top tips that I wanted to share with you today. I'm sure that the audience will have many, many more tips and tricks to be added. And I'm sure that if you are an institution that is currently undergoing a digital transformation process, you will have your own other tips to add. But I hope that today's session inspired you to think about what is important. Maybe you've missed some elements of that digital transformation. Maybe there are things that you would like to talk to Ezbob about when it comes to our experience and expertise as an ex-lender. We'll be very happy to follow up with you on a separate session. So that concludes the prepared part of our presentation today.